Welcome back to Trading 360. I'm Diane King Hall. Time now for the big three. 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the charts. And here to take us through the trades, we've got Jessica Inskip, Director of Investor Research at stockbrokers.com. It is great to see both of you all. Always love when you all are together. All right, Jessica, let's dive into your first stock on your list. You've got CME Group in focus. I hadn't been paying attention to the chart on this one. It looks really good so far year to date. Take us through your thesis here.
Absolutely. We are in the midst of earnings season. We kicked off with financials, and Bank of America this morning gave us indication that it was about a 16 to 17% increase in the trading environment that really attributed to their success. Also on the macro front, they have really adequate reserves positioning for a 6% unemployment. So I think that's a good indication into the consumer health. I listen to that for financials and then go into my picks. So the way that CME relates to that, CME is an exchange mainly on futures products. If we think about this uncertainty that we have within the macro environment in regards to tariff policy and how to position for that, from a trading perspective, that would go into hedging. And of course, the futures market, which CME covers, which is inclusive of commodities and a lot of other products. And in addition to that, we have an increase in retail participation. There is an increase in this 24/5 trading that brokerage firms are starting to introduce. Even Schwab is now coming on with 24/5. And so since that's the equity perspective, we still have to remember the futures. They're already nearly 24/7 from a market access perspective. And then if we think about the trend of just how the retail market and markets work to hedge properly, you need options and derivatives. So I think that's only going to position CME Group to be a beneficiary of that increased uncertainty, which equals increased trading, which also this expansion of more market access will benefit CME from a lot of fronts that I think will translate into earnings that aren't necessarily recognized yet.
All right, I like the Schwab shout out there, Jessica. All right, Rick, I just kind of teed us up, giving a kind of, I guess, a preview of the chart. But take us through what the chart looks like for CME Group, Rick, from your perspective.
I, for one, welcome 24/5 trading. I have 3 little kids, so I don't sleep anyway. Might as well trade while I'm up. Anyway, so upward sloping channel here for the most part here, and a nice rally. We are seeing a 43% rise off of these 52-week lows we saw just shy of 185. From there, we have enjoyed, a consistent push to the upside. Our orange 63-day EMA has been supportive, as was our previous lows here. You can see we had a confluence. We had our old lows, our orange 63-day EMA, and our longer-term trend line here, all coming together right around 250, 249, 250 or so. So this would be a noteworthy area to watch going forward. You can see that in recent days, we've pushed above our yellow 21-day EMA. We are approaching those old highs near 273.42. RSI, kind of, in contrast to what you're seeing with the price action, has actually been drifting downward here. We dipped below that 50 midline for a short time. So look for RSI to break this trend line in conjunction with a price breakout. Now, if we were to look at our standard deviation channels and volume profile studies, you can see right about where we are now is the only real volume node anywhere close to where we are now. So this is an important area to hold right around 264 or so. If we were to move lower, old green line, that old area right here, 250 around that point would be supportive. To the upside, 273, 274 would be further breakout potentially.
Okay, so important area to hold is essentially right where it is today, around 264, as you mentioned. And so we're seeing the stock trade literally just above that, but on a percent basis, up a little more than 0.25%. Jessica, final thought on CME Group before we move on to your next pick.
Yeah, absolutely. It's all looking for the beneficiary of this increased retail participation that we have seen since COVID. So listen for trends from bank earnings around increased trading activity, and then that should translate into CME.
Well, we've certainly seen that trend across the banking sector, some strength there. All right, let's move on to your next pick on your list. That's Chubb. To me, and I don't want to read through your thoughts on this. That seems like it's an insurance play, essentially, in the context of if there is some weakness in the economy. But tell us your views here, Jessica.
Yeah, absolutely. You are spot on, Diane. The rest of my picks here actually came from my technical scan, and part of it is still smoothing out volatility, lower beta securities, looking for dividends, and then moving the portfolio asset allocation, good practices for self-directed investors when we have this type of volatility and movements when we move positions around. So I'm still on that defensive side in case this is a bear market trap, if you will, or a bear market rally, because we are at my resistance there. So nonetheless, this did show up on my technical scan. That's when I look for a crossover of the 13 and 26 weekly moving averages. That tells me that 1 quarter worth of prices is increasing relative to 2 quarters. And we look at the market quarterly as we do earnings. So one, that was what prompted this coming up on my list. Second, this is actually something that Berkshire Hathaway recently added 6.4% equity stake in. So Berkshire Hathaway, Warren Buffett, we all know his methodology, is really looking into the details. So that speaks some volumes from a fundamental perspective. And then you're right, it's a leading global property casualty insurance business model. 85% of its revenue is derived from that. Their claiming costs have been moderating. We do have rising catastrophes, so something to be cognizant of. But there is this insurance trend that I see within Buffett, and a lot of insurance stocks actually showed up on that scan as well.
Okay, well, when the Oracle of Omaha speaks, or signals, I suppose, how we want to characterize that, we should listen. But Rick, what do you see when it comes to the chart for Chubb?
Sure, perhaps not a household name necessarily, but a pretty decent chart. And a couple things stick out to me that are interesting about this one. So first, we could draw our trend line, beginning with that low point all the way back over there, 238.85. Sorry, my touch screen was not cooperating there. Okay, and now we can see that from there we have connected our low points a couple subsequent times here. And this is the one I really want to call attention to because I drew it connecting the close. The closing prices are typically more important than the intraday prices. If you were to draw it other ways, it wouldn't match up quite as well. Oftentimes, you know, it may feel kind of strange to go through the middle of the price action, but the closing price is really the most relevant piece of information here. Now, once again, you can see that our moving average, our purple 250 2-day EMA, after this initial breach to the downside, has been supportive recently. We had a bit of a push to the downside here, giving us our lows of 266.74, but we recovered quite rapidly here. We've crossed above all 3 of our moving averages in rapid succession. Now we are attempting to overtake those previous lows that we saw near 288 once again. So a push to the upside beyond that level opens the door to our high point here near 302. That was around the site of our best close. We did make some highs beyond that point, but it was not to be. We had a quick drop off here amid some bearish divergence on the RSI. RSI not really doing what you would want to see when a stock is approaching a previous high. In this case, it did translate to a downside move. Now, as we are looking to recover and reassert some kind of bullish activity here, we can see that price is near an important point. Moving average, linear regression line, volume profile, point of control, old lows, all of these come together. So a push above 290 would be really what the bulls would want to see in this name. To the downside, old lows, trend line, and volume node come together near about 267.
All right. There we go. Right now, Chubb under a little bit of pressure, but as Jessica mentioned on her list, this is a defensive play. But let's talk about your final trade, Jessica. You've got JM Smucker on your list. Are we going to be stocking up on jam? What's behind this one?
Yeah, it's another defensive dividend play, but also an options trade that I think would make sense here because I see a little neutrality, if you will, with this one. But exactly right. There is a dividend yield of about 3.66%. It is a very low beta coming in at 0.21. So we would sign the market a beta of 1, anything underneath that. So this is really low in comparison. So it is absolutely a defensive position in the consumer staples. This also showed up on the technical scan, which I found very, very interesting. And nonetheless, pulling the technicals from there, I like to look at the 200 weekly moving average as a long-term secular trend. This is actually coming up as a point of resistance for this company at around 121.76. Remember, moving averages are moving targets, so that adjusts. Right. And diving a little bit deeper, they had some strategic acquisitions that gave them some diversity, if you will, but the Hostess acquisition recently, it added growth potential, but it also increased debt. There was a cost that came to that, something to monitor with this type of environment. So rate watch cash isn't going to be on this. So the way that I would position this, I would not buy the stock outright. I actually would utilize an option strategy. So I would sell an at the money option. So looking at something relatively close to the current price with about 45 days out. That helps us optimize theta or extrinsic value since we're selling this. And I essentially would be selling a cash secured put. That's a neutral strategy that is neutral in the short term. It's bullish on the long term. My maximum gain potential is the premium that I'll receive, but my maximum risk is equivalent to stock ownership at the strike price that you choose that's offset by the premium that you receive. So that's how it gets its neutrality. If it does move adversely, you own the security, but at a discount relative to the current price.
Okay, that's Jessica's look at JM Smucker, including how to proceed with regard to this one. But Rick, take us through what the technicals look like for it.
Now, this is a household name. This is about as household as you can
Yes.
get here. So when we were looking at this chart, I mean, what strikes me immediately is how consistent the ceiling has been. The stock really had trouble getting above that level. 122.40 was our best close. Even though we made intraday highs beyond it many times here, we just couldn't make a convincing push above that level. From these highs near 125, we have a downward sloping trend line that price is approaching once again here. So that gives us one level to watch, 120, and then that high point near 122.40. So you can see, like our previous entry, we had more bearish divergence here. It did translate once again into a drop-off, but you know, there was so much tariff-driven news. It's kind of I wouldn't want to hang my hat on that one and be like, oh, look what happened here, because it was pretty much news-driven and it affected pretty much everything here. So you don't look at indicators in a vacuum. You don't look at just one thing. Kind of put them all together to develop a cohesive outlook here. Now, I know Jessica had mentioned cash-secured put selling. There's a couple downside areas that stick out to me. Not a recommendation, not saying you should do these things. I'm just saying these are the most notable downside potential support areas that stick out at a glance. So if we were to start looking, we can see here that we have a confluence of our yellow 21-day and purple 252-day exponential moving averages that line up with this rather large volume node. So around 115 is one downside point of interest. Then we had a pretty consistent low. We had a triple bottom in terms of our closing prices right around 109. That's also where the volume really starts to drop off below that area. So those would be a couple downside points that stick out to me. To the upside, if we were to keep moving higher, you know, it's that level I mentioned before, 122. Look for a close beyond that point for some signs of further movement to the upside potentially.
Okay, there are your levels to watch for movement potentially on the upside to the downside on JM Smucker right now. It's under a little bit of pressure. That's Jessica Inskip, stockbrokers.com, and our lead market technician, Rick Ducat. Thank you both for the analysis and insight.